Testing, testing, 1, 2, 3, testing. This is Kathy. If you can hear my voice, please type in yes into the chat Kathy box or the question box. Actually, we're going to be using the question box in GoTo for questions. Although if you really forget, I'll be checking the chat Kathy room as well. Okay, wonderful. Thank you all for joining us this morning. We've got a nice little crowd here, which, I am happy to see. We love to trade non-farm payrolls. Today is obviously non-farm payrolls day, the June report, and non-farm payrolls is traditionally one of the most market-moving economic reports on the FX calendar. A lot of traders avoid trading non-farm payrolls, and a lot of people say trading news, the best way to trade news is to sidestep it. But here at BK, we really love to trade news, and we really love to trade live, which not everyone does, and so we are delighted to do that with you here today. Now, before we get into trading, there are two trades that I'm looking at. They're not exactly NFP trades, but you may know that I trade ZIP, and I've got a fresh ZIP sell signal in Euro Kiwi at 164.17, and then I also have a fresh ZIP sell signal in Euro CAD at 134.93 here. So these are they're not really NFP trades, but I think it would be remiss to say that the crosses will not be affected by NFPs. Everything in general is affected by NFPs. And so I think, even though the crosses removes the US dollar component of the trade, they will still inevitably be impacted by non-farm payrolls. So I'm looking at these two setups right now, and we'll watch how they move. Actually, what I want to do is I want to show you this because I've had on my other screen. But Euro CAD, we have two ZIP sell signals. It's already moved our way, and for our BK members, I like to encourage that you look for these signals in Europe, especially between after 2 a.m. onwards, because they tend to be quite powerful. And obviously, I'm asleep during that time. I don't really catch them, but if you do see them during the European session, they can be pretty good as well. Euro Kiwi, also fresh ZIP sell signal. It's moving up a little bit, but I'm watching these. But in terms of NFPs, the ones that will be most affected will obviously be the US dollar pairs. And, we'll talk about those opportunities in a little bit. But that's, two setups that I am looking at. Okay, so I'm not the only one here today. Boris, say hi. I'm sure he'll say hi in a minute, but Boris is also here with me. Hi
guys, I'm on mute. I'm just waiting for Kathy to set her up. And then, after the NFPs hits, we're going to trade reactively my bounce protocol, which we'll talk about a little bit. We have actually plenty of time before the NFP, so we'll discuss all of that. But I'll let her take you through the ZIP trade setups. As a matter of fact, those of you who are trading live with me, we just had the Dow resolve positive. I'm trading in front of the NFPs, which is just insane. I totally understand that, but I'm stress testing the bounce protocol to see just how well it performs even in the worst conditions, and so far surviving. So we just resolved, for those of you who are live in my trading room, just resolved our Dow trade, and we're still long NASDAQ with a target of 51. So we've got to see 12,751 and see if we can resolve that before the non-farm payrolls event. But I'll let her run the show first, and then we'll get into all the details of exactly what we do every single day.
Yes, we have plenty of time to do that. Okay, before we really get into it, here's the disclaimer. Past performance is not indicative of future results. Trading forex carries a high level of risk. It may not be suitable for all investors, so please make sure you're aware of those risks before you get in. And there's a whole bunch of people joining us late, And, you know, in the very beginning, I talked about how a lot of experts sidestep trading non-farm payrolls. They sidestep trading live. We love to trade news. We love to trade non-farm payrolls. We love to trade live. I personally, to be honest, don't usually square up before non-farm payrolls day. We've already made 100 pips and hit our target in our zip trades, and then another 100 pips in our smooth 40 trades for over 200 pips this week. But still, there's a lot of opportunity.
Yes. And when Kathy says we, what she means is me, because I'm the trading junkie in this relationship. So I'm the one that always dives in head first into the biggest risk events. But yes, regardless of whether you trade post or pre, we certainly, you know, don't shy away from this. So go ahead, I'll let you go.
And as I said, you know, Boris, he said he loves to trade live, and and this is what he does every single day around news releases, and you know, so we'll get a lot of exciting things there. But in terms of pre-NFPs, those of you joining us late, I was looking at shorting Euro CAD. It was up at 134.93, and also Euro Kiwi, which have fresh zip signals. I'm just repeating this because a lot of people joined during the webinar after I started talking about this. And and I just want to re-mention that while these are not exact NFP trades because they remove the US dollar, they're the crosses, you know, you can't ignore the fact that crosses will also be affected by NFP. So we do have to be very careful. So why is non-farm payrolls important? Non-farm payrolls is important because jobs are the backbone of the US economy. And you may know, and you should know, that, you know, in the FX market, the dollar encompasses about 80% of all FX trades. So US data is indeed the most important pieces of data, period. And it is the most, and since the dollar encompasses so many of the FX transactions, US data is inevitably the most market moving. And that is why the US jobs report is the most important jobs report of all jobs reports that we have on the FX calendar. And also, you know, jobs are important because, as I said, they're the backbone of the economy. Without jobs, you don't have spending. Without spending, you don't have growth. And without growth, you don't have the argument for monetary tightening. We're at a very delicate phase of the US economy, as well as the Federal Reserve's monetary policy cycle. Everyone knows that the Fed is gearing up, has raised interest rates and is gearing up to raise interest rates further. There are expectations for another 50 basis points at their next meeting, and, you know, pretty aggressive rate hikes in 2022. A large part of that is driven by the tightness of the U.S. labor market. The fact that, you know, jobs are scarce, and you know, that you know, employees still have the pick of the litter, the upper hand. So given the tight labor market, even in an environment where we have stocks selling off, we have interest rates rising, we have prices, gas prices, commodity prices, just regular food prices rising, the Federal Reserve feels confident that the U.S. economy and U.S. consumers can withstand that because, you know, they feel confident about the labor market. They feel solid about their job situation, and they have a high savings rate. So we need the non-farm payrolls report to continue to reinforce that. Now, because the labor market has already built up so much underlying strength, even if we get a softer report today, we will get an initial sell-off in the US dollar. But I don't think that it's going to be a durable sell-off because there is underlying strength. And because of the underlying strength, there is a situation where the Fed will just, you know, or the Fed will definitely just charge on forward with rate hikes, regardless of how this number is, unless it's really, really terrible, which we don't necessarily expect. So what is expected from the non-farm payrolls report? Let's take a look at this. So we have job growth expected to slow from 428 to 325. The unemployment rate expected to improve. And average hourly earnings expected to improve. So the headline number is expected to be softer, the guts are expected to be stronger. And this is the trickiness of trading non-farm payrolls, in the sense that all of that is important. It's not just the headline number. If the headline number is about what is there, then the focus could really be, or the driver could really be, the unemployment rate or the average hourly earnings, depending upon whether those miss or beat. So that makes trading NFPs a little trickier than trading a straight up U.S. inflation report, or some other jobs report, or some other report from another country. So overall, the market is expecting generally a slightly softer tone, but the US dollar remains quite bid. And because it's holding on strong this morning, the market still expects slightly softer numbers, but still good enough for the Fed to charge forward rate hikes. And also, they're holding out hope that it may not be so bad. So whenever we look at non-farm payrolls, we use 8 what I call leading indicators for NFPs to guide us into understanding which way the NFPs report could sway. So with NFPs, we look at non-manufacturing ISM, ADP, challenger layoffs. We also look at jobless claims, continuing claims, consumer confidence, University of Michigan survey, and the manufacturing ISM report. As we're talking, I want to point out that Euro Kiwi, Euro CAD has moved quite a bit in our direction. You can take some of the money off. It's not huge moves, obviously, about 15 pips move.
Yeah, sorry to interrupt. Also, I just totally forgot. I'm actually triggered in gold, in case anybody's interested. We're targeting 1867.
So which way, Boris?
Sorry, triggered gold long at 65, targeting 1867. This is just strictly a technical trade in front of the event. It could completely turn around on us. So if we get close to our target before the NFPs, I may just take this trade out. We're looking for $2 target, $2 stop on gold.
And this is the same thing with the trades I've shown you. Typically, we go for more pips, but because we're pre-NFPs, there's a lot of volatility, there's a lot of grinds. If you got the money, you grab them. I think that's pretty indicative of news trading in general, which is that you can't expect a lot. With news trading, you want to grab your money, go, especially pre-data. Post-data, you might have a bit more continuation, because actually post-NFPs, oftentimes there's very strong continuation once the dust settles. But, with the moves we're starting to see, it's if you're looking at multiple positions, you can start considering taking some off. I think we may have a little bit more juice, but be careful. Zip is working. Zip works. These are sell signals. We actually rode this Euro Kiwi move lower yesterday, but pre-data is a very treacherous environment. Okay, so these are the leading indicators for NFPs, the most important of which is non-manufacturing ISM, which unfortunately the service sector ISM this month we don't get until after the NFP report. But in terms of how the other pieces of data stack up, let me show you this. I've actually done the work for you and organized this in this beautiful graphic here with arguments for stronger payrolls, arguments for weaker payrolls. And you can see that first off, there are more arguments for weaker payrolls than there are for stronger payrolls. And the arguments for stronger payrolls are, modest, where 4-week jobless claims declines, continuing claims declines, showing the tightness of the labor market. Challenger reports fewer job cuts, but even so, ADP, which measures private sector payrolls, was the lowest since December 2020, which is a long time. I mean, that's enough to get us worried. Consumer confidence is also a 3-month low, and the University of Michigan Consumer Confidence Index is at a decade low. So consumers are getting worried. And when consumers are worried, businesses may be worried. So they may be hiring less, especially in the context of supply chain issues, rising prices, equity market uncertainty, Chinese COVID lockdown. There could very well be less hiring.
Just one quick interruption. We're going to take profit here at $35 in gold. We're almost to our target, $66.50, just in front of the NFPs. In case you guys rode that, it was good for about $1.50 since I started showing it to you. Go ahead, Kate. Sorry.
And then the ISM manufacturing index actually moved into contractionary territory, which means they're shedding jobs. So that's really bad news. Now, of course, it's a different line item for jobs, but this is not good news. So overall, this is one of the reasons why I think that NFPs could be softer. So if I think NFPs could be softer, what's the potential trading opportunity? Now, as I said earlier, I don't love trading the dollar pairs pre NFPs, but dollar yen and dollar Swiss are two pairs I'm looking at. I love that dollar Swiss is rejecting the indicator line. And I think, 95, 98 could be a good level to consider selling pre-NFPs and hold in closing probably right afterwards in dollar Swiss. Now, dollar Swiss is lower volatility than dollar yen. Dollar yen is going to move faster, more, and maybe even drift lower from 130.90 before the data and have a bigger reaction. But dollar Swiss is definitely a safer trade. And I like this more because we actually have dollar Swiss in the zip sell zone, which means that we have the background being red and the indicator line and the currency pair below the indicator line, which I like quite a bit. Whereas dollar yen is actually in the zip buy zone, which I don't like as much. So dollar Swiss would be the trade before NFPs, which we looked at 95, 98. So that's what we're looking at. The main focus for the NFP release will be the actual number, obviously, average hourly earnings, whether they actually fall, because that's such a pretty big deal. Because if earnings fall and prices are rising, they won't be able to afford the higher prices that are pinching U.S. consumers. And of course, any revisions that we may be having on this report as well. So how are we trading the non-farm payrolls report? Well, I already talked about how I'm looking at trading the NFP report with the dollar Swiss trade proactively. And then we'll see if there's any opportunities reactively. We still, the EuroCAD and Euro Kiwi short trades are still working. So that's what I'm looking at. And so, that's what I'm looking at from my perspective. I'll let Boris talk about, now how he's looking at trading NFPs.
Okay. Hi, guys. So we are going to trade NFPs post-event. Should I take the screen and just show them a little bit about my setup here right now? Or?
We've got about 10 minutes, which is a good amount of time.
Okay, let me just change presenters. And we're going to share my screen 1. Let's make sure you guys are seeing it. Okay, very good. So on the screen here, you are seeing the Dow, US 30, the NASDAQ, both of those are on a 1-minute chart. And you're seeing gold and oil, and those are on a 5-minute chart. In addition to which, let me just go to large screen. What you will see is that we're trading something called the bounce protocol, which is where we trade all day long live in my chat room. And literally every single trade I make is posted, just 1 second here, posted automatically from my account into our bounce chat room so you guys can actually follow it. Remember I said to you we were long Dow, and then I said I was hoping we'd get out of the NASDAQ, and we got out of the NASDAQ as well. So you can see I'm trading the Surge audition account, $1 million account, along with you guys to use my bounce protocol to fund that account. And you can follow my journey every single day, 20 hours of a day that I'm trading through the bounce channel, which completely is transparent in terms of tells you exactly what I'm trading, what size, where my entry, where my stops are, and everything else. But the bounce protocol itself is a very, very interesting trading strategy that involves sort of 3 serious components. What we're trying to do almost always is buy bottoms, sell tops. So as you can see, this is a proprietary trading view indicator called bounce both ways that automatically paints the highs. These will be adjusted as new highs, new lows are made on the day. And also automatically paints these stripes, these sentiment stripes. This is actually the RSI oversold conditions. And our classic foundational trade is when price hits the low and it's complemented by oversold conditions, we then wait for a green candle. By the way, these candles are also proprietary. They're not regular red-green candles. They are colored in a very special way. So all of this is kind of proprietary to our room. You obviously, once you enter our room, have access to all of this. And once we get these three conditions, lows, sentiment strip, green candle, we go long, for a certain amount of pips. We have a fixed amount for each instrument, depending on how it goes. So we trade primarily the stock index futures because those are the most viable. They trade the fastest, they trade the most. We usually try to do I sometimes do as many as 20 trade cycles per instrument over a 24-hour period, meaning that I can do 20 trade cycles that resolve positively in equities. In addition to that, we also trade gold and oil, but those we trade on a 5-minute chart. And as you can see, what I was sort of showing you here was that gold was at lows. We didn't have we had a sentiment strip way behind, but it was good enough. And the fact that we were at lows, and I had a signal here that I was willing to take a punt on it. We bought at 65. The target was 67.5. But as I said before NFPs, you really don't want to be standing in front of a freight train. So I took a $1.50 long on this, and that was a classic setup for what we do. And in addition to which, obviously, we have we have oil really coming up to the highs. Now, as far as the NFPs goes, from a fundamental point of view, the critical thing that I'm watching, and I think the aside from job numbers, which is what the headline number is, but it's really not important in my opinion. The truly important number will be wage growth, because if you follow me on Twitter, and I recommend I pretty much stick to the markets these days. I used to rant and rave on Twitter, but now I literally just cover the markets. And if you sort of follow me on Twitter, I made this point on Twitter that the runaway inflation argument basically rests on two assumptions: that we get push-pull wage inflation, or oil and foodstuffs continue to squeeze higher. Now, the push-pull wage inflation is the thesis I think is not true. Labor does not have a lot of bargaining power. And if wage growth, which has already slowed significantly after a one-time big bump, comes back, it sort of evens out, it's going to make it much more difficult for the Fed to really tighten hard. Now, against that, what is a very negative input to equity markets is oil. And when we day trade all day long, one of the things that you'll see is this really strong inverse relationship. As the higher the oil climbs, the worse the stocks behave, because they hate the idea. Oil is the one variable that none of the policymakers can control. And that is the one variable that really puts a very strong pressure on inflation. So they're forced to do things that are very negative for the economy in order to ameliorate it. So that's what we're going to be watching. We're going to be watching oil reaction and non-farm payrolls. We're going to be watching the wage numbers, and we will see how those go. One of the things that's going to be very cool is that you guys, it's the first non-farm payrolls where you're going to be privy to me trading and all of the trades visually showing up live with entries, stops, and targets on this trading view, because we finally integrated trading view with our ACAP MT5 platform. And just to show you, those of you who are interested, this is the platform that everybody trades in my room. It's basically this automated order entry platform that manages all of our trades, manages our stops, manages our targets. Really cool. You can see this with my gold. This was my gold trade that I just closed out just a few minutes ago. And it's kind of like this spreadsheet on steroids. And you won't be seeing that, but you'll be seeing the results of that action. And I'm hoping that as many of you as possible will come join me in the room and trade with me live and get the full benefit of the tools, the analytics, and of course the trades that we do every single day in this structure. We got about 5 minutes. Is there anything you'd like to say, Kay, or should we keep going?
Well, I mean, we've got 5 minutes, and I'm just currently watching the dollar Swiss trade, the Euro CAD and Euro Kiwi. We had, I had suggested taking profits earlier. It's up to you whether you want to hold onto it, but I think there's a lot of volatility. Pre-NFPs, it's better to just focus on one pre-NFP trade, and then the best opportunities truly are post-NFPs when the dust kind of settles a little bit. And that's when the action gets heated up. But I think this kind of illustrates how differently Boris and I trade, which is that, Boris likes to jump in post data, which, I may too, and we'll call out the numbers when they are released. But
sorry, go ahead, keep going. I just realized that I wanted to pull up the applet, the news applet, so that we could.
I tend to prefer a more relaxed trading environment where, we are either, right and we, hit profit targets quickly, or we're wrong and we're out with NFPs, and then also see where the opportunities are post data. But, dollar Swiss is still rejecting the indicator line, which is great. Another thing what you'll notice is that Boris has got his 1 minute and 5 minute charts up, and I trade 1 hour charts. Actually, my video this week is going to be on what is the best, my YouTube video, and you can follow us on YouTube/BKForex. If you want to show that quickly, I think it may be a good opportunity, Boris.
Sure. Sorry, you want me to show our channel?
Yeah.
Okay.
Just type in youtube.com/BKForex.
You're making me type.
So I put together these great videos every week, and this week it's going to be on the best time frame chart to trade. Welcome to our YouTube channel. The best time frame chart to trade. So that's going to kind of talk a little bit about how different Boris and I are. How I trade 1 hour charts and he trades 1 minute, 5 minute charts, and we talk about which one is best. So subscribe to the channel and you'll get the video as soon as it drops. I think it's a pretty good one this week. So I hope you'll enjoy it as well.
Right.
But yes, we're very different, and Boris live trades with our members for 1 hour, and that's all it takes, to make a couple $100 to $1,000 an hour every single day. Well, not every single day, but we target that every single day. And I trade 1 hour charts, and the trading, especially my Asia trades, are a bit more relaxed. But money can be made on any time frame.
Right. So Kathy, just to understand, Kathy's target is to make 100 pips per week, which is something that she meets quite a lot. I mean, like I would say maybe 80% of the time she's there. And of course, some weeks are going to be 200 pips, other weeks are going to be 50. But this is her very, very reasonable target of what she aims to do in FX. Now, my target is. Somebody was asking me, how well am I doing in my audition? I'm doing quite well in my audition, but my target, the way I trade, is incredibly high accuracy, because I take 3, 4, 5 attempts at the same trade. In other words, I'm willing to repeat my setup 5, 6, up to 8 times. In order to be able to do that, I have to initiate my trade with very, very small amounts. So my target is to make 10 basis points per day, which is 1/10 of 1%. And if you think about that, what does that mean in percent terms? Basically, I'm trying to double the account in about 6 months' time, if you're whatever size you're looking for. My protocol is considerably more complex as far as sizing, structure, margins, and everything else. And we have a whole series of lessons on exactly what I do, how I do. In addition to which, by the way, I have to tell you that this is only one version of it. This is the version that is day trading scalping. I also have a much longer term version for FX, where we do 100 pip trades on it, like larger pip trades on it. So we're coming up to, like, right now, here's our numbers. Not a bad number, good number on everything.
Okay, I would get out of the dollar Swiss trade at 96.09. That's obviously not working. And then flip over to, you know, either short Aussie or Kiwi trade. Go ahead, Boris.
Okay. No, sorry, go ahead. I'll let you do all your trading.
Well, I'm just looking at my charts right now, but you know, the dollar Swiss trade, you know, I would get out of it because it seems like, you know, 390, although the unemployment rate isn't great and the average hours earning is actually lower. So actually not stronger numbers all around.
No, it's not. It's good for stocks. I think it's good for stocks. I'm actually going to go market buy, not something that I really do, but I'm going to go market buy NASDAQ. We always trade NASDAQ with 15 target, 15 stop. Lots of volatility, so it could easily get stopped out. But here you can see it's an 87 target, 57 stop. And we just made our target. That was also going to be a good trade. I'm going to hold off just 1 second here and put myself into a setup mode, what we call the buy mode. So let me move this off screen just a little bit into the Dow Jones, which, as you can see now, is really rising off the bottom, has a green strip. And one of the things I sort of did not get a chance to explain to you was that with equities, 8 out of 10 of our trades are to the upside. Where in equities, our basic approach is we buy the dip, we buy the retrace, and only very, very, very rarely under incredibly overbought conditions do we sell the top. And you may ask me why such an incredible bias to equities, especially when they've been in a bear market. You know, aren't you crazy? Actually, no. The reason why equities are almost always a buy asset, this is specific to the U.S. equities, is because U.S. equities are actually on any time frame a 60-40 bet, meaning that on a daily time frame, 60% of days are up days, 40% of days are down days. If you were to take a random point on equities on the S&P 500, any day of life from 1935 onward, 1928 onward, any day, just put a random entry, 250 days forward, a year forward, 75% of the time you would be up. The U.S. equities are what's known as a upward drifting bias, and when the flip of the coin is 60-40, you are a fool not to trade it. Now, gold here is another trade that's bouncing off the bottom. I'm trying to understand why gold is reacting positively to this. It was not. I guess they think. I mean, gold is reacting positively to this because commodities are still continuing to trade up. And I guess we'll take we have a setup in gold here, so it's legitimate. We'll take a buy mode position, meaning if this candle holds its greenness, holds its positive value, until it completes, and we always enter on a completed candle, we'll go long gold. Although I don't, with commodities, I generally like to have a fundamental confidence in the idea. And here I'm kind of neutral because remember I said to you, the only thing that matters is wages. Wages were low. Wages were low. There's no way Fed is going to do much of anything here as far as wages go. Now we are all of that is very positive stocks. The less aggressive the Fed is raising rates, the more positive it is for stocks. That's why I'm bullish stocks. We have 6-7 seconds left. We'll see if the Dow trade triggers positively here. And actually,
so I was saying in our room that I still like the short Euro CAD trade the most. And I think there's more room to go to the downside post data. And, I think, and I also think, Euro Yen to the upside could be interesting ahead of the ECB rate decision next week. So those are looking, pretty good in my book.
So just to show you in big numbers, so you can see 73 is the target. We're in at 43.13 is the stop, and we're long this trade. This is our second trade. We were long NASDAQ. Let's see if we can get the 73s done. We're getting very close. We do not move our stops. We don't ever. We win, lose, or draw on every single trade. In other words, really, really hard and fast rules. The only time I broke my rule was today because I was an idiot. I forgot that it was non-farm payrolls. You should never trade a European session during the non-farm payrolls, and that was clearly a dumb idea. Anyways, you see it came close and it may stop us out, and that's fine. And if it stops us out, we'll go back in and we will trade it again. And as a matter of fact, I'm sorry, let me just go to full session. We just got stopped out on NASDAQ. You guys may not have seen this. I had a positive trade to NASDAQ, positive trade to Dow. That's fine. We are now what's called entry 2 or level 2. We're now at a second stage positive setup. And the next green candle, which may take 1 minute, 5 minutes, 10 minutes, they may sell it off really hard. We don't commit to our long trades until the market actually shows us a green candle. So that's another thing that's really interesting about our strategy is by doing that, if there's a strong sell-off, we avoid the whole sell-off. We just simply stand aside, wait until the market stabilizes, ready to rally, and then re-enter the market again. So the algo is going to just wait patiently, unlike any human trader, and try to reset its position now to level 2. If both Dow and NASDAQ turn positive, we'll be trading that to the upside. But yeah, overall, I guess you would call it a mixed result in a sense that jobs are still printing, wages are kind of stagnating a little bit. I think one of the things that you're seeing here is it's strong enough to have an impact on rates. I mean, actually, let's take a look at where are the rates. Where's my?
I just want to show something real quick, Boris. I'm going to grab the screen. So this is the Euro CAD trade dripping lower, working nicely. Dollar Swiss had zipped to the upside and get a chance to tell you guys. So when we exited the trade, Dollar Swiss zipped to the upside, and when you get a positive zip like that, that is generally a very strong buy signals to at least to this zone here. So when it had zipped around 10, targeting this zone here is how you would use the zip signal. And Euro CAD working nicely. Euro Yen is just kind of hovering. Dollar Yen is doing good, but Euro is drifting lower a little bit. It wants to move to the zip sell zone. It has to get below the zip indicator line. Also, we'll see how it goes, but Euro CAD really does seem to be, the winner right now, and Dollar Swiss has more upside.
Kate, can you talk a little bit about the rates? I mean, rates are up a little bit. I think it's obviously affecting FX on your end, and I think
rates are up. When rates are up, that tells you, and after the data, it tells you that the market's kind of made its decision about how it feels about this report. It's, rates are really important to my trade. When we started the New York session, the Asia session, it kind of gives us the guide to our bias. So that rate, not only with rates which were flat pre-data, now they're up quite substantially and continuing to rise, tells us that this dollar move has continuation. And typically after non-farm payrolls, you can have quite a bit of continuation. And that's why, the dollar yen trade should continue to work up to, above 130.60. The dollar Swiss trade continue to work. But as I said, dollar Swiss moves more slowly than dollar yen, but I think it should get to this zone over here. Euro dollar itself, I actually think it's going to move lower. Euro dollar is not so great to short next week because we have the ECB rate decision. But maybe Kiwi dollar could be a better bet because Kiwi responds more to dollar strength with no real significant data next week than Euro dollar. So this looks like it's just about to form a zip sell signal. So I think it will. See, there you go. And I think we're probably going to see more downside towards this region here, 20-30 pips to the downside. So lots of really interesting trading opportunities for zip as well as for bounce. But you can see from, if I pull up my Slack room, which I'll show you in a second, you will see that for the most part, this is where I post my trades. I'm done for the week. Sorry, where is it? We are up 101 pips in Smooth 40, 112 in Kathy trade signals, and we don't trade pre-NFPs. And we did trade Mondays, so 213 pips in 3 days, everything time stamped with explanation, charts, levels. But if we were to trade, it would, the Kiwi is working, is continuing to move in our favor. Dollar Swiss is working as yields continue to press higher. If this suddenly starts to drift lower to 1.5, I would be worried, but it just continues to push higher. So dollar Swiss chugging along up, reaching these level targets that we expected here. So it's pretty much there.
Just to let you guys know, we went short oil 1877, 11877. When Kathy's done, I'll show you on my charts why, but go ahead, sorry.
But yeah, I mean, so I think the market's made up its decision about it being long dollars. You don't have to guess because bond yields are already showing you that. And on YouTube, I have this great video. It's like a must watch video on how bond yields affect FX. It's one of my most popular videos, and I, highly recommend that because that is definitely, I'm trying to see if I can pull it up and show you, and then, but I have a video here. 3 ways I use, let me just show you here. There's lots of great stuff here. So like 3 ways I use bond yields to trade FX, how to use commodities to trade FX, how to use sentiment to trade FX. This is the video that's really popular, how I use bond yields to trade FX. So, and that's pretty much what I have just been talking about is how we do it. Yields are continuing to move higher, explains why dollar Swiss hits our target. You should be out. We had talked about going long around the 15-20 region. It's out at 35.36. Kiwi dollar still looks good, and I think Kiwi dollar has more room to slide, maybe to 0.5 figure. And Euro CAD is just kind of hanging tight. Euro Yen, I would actually be out of Euro Yen. It's not really doing much. I like it still quite a bit fundamentally, but Dow futures are holding at this minus, well, actually, they're starting to rally, so maybe that'll give us some oomph, but it's not as interesting, I think, as just the straight up long dollar trades. So did you want to talk about anything? Did you want to share your charts and show the oil trade for us?
Sure. Hang on, let me just do this. Sharing.
You can see these zip signals working beautifully. I mean, look at this dollar Swiss zip buy signal continuing to move upwards, and this Kiwi dollar zip sell signal continuing to move downwards. Really nice setups that we've got here.
All right, super. Kay's done really well, and her unique fusion of technicals and fundamentals is really the reason why you want to be in that room, because
and bond yields and sentiment too.
Right. And bond yields and sentiment, and all of that really goes hand together into an incredibly well synthesized, well-oiled machine that is done. I forgot 5,000 pips over the last couple of years. Is just every single week she's banging it. Anyways, somebody's asking, I think it was Mika was asking, if I join the room, am I going to be able to see your results on SurgeTrader minute by minute, my friend, minute by minute, right here. Here we go. You see that? These are all my results. This is my $1 million account. It's up to 15,000. I'm looking to do 100,000, so I'm up 15,000 on the account so far. And yes, you will see all of my trades minute by minute. So we trade very transparently. Every single trade that we do, whether it's FX or commodities, equities, and everything else, is 100% visible to all members at the moment it's made, with stops and targets. So there's we trade for real. So
the oil.
What's happening? Sorry,
go ahead.
Yeah, oil. Yeah, so what's happening now is kind of interesting fundamentally. And by the way, if nothing else, this layout will tell you more about what's going on in the markets than I think any news wire piece of information you ever read, because it's really, these are the 4 components that express pretty much everything the markets participants are thinking and doing in the market right now. So as you can see, rates going up destroyed gold. Gold just dumped a good almost $10 and still scraping the bottom. Oversold conditions. Now our strategy is to wait for the bounce. So eventually gold is going to stabilize and it'll try and do a bounce. We also have, and as you can see right now, we just went long on our second entry in the Dow. I'm wondering why we didn't go. I'm just looking to see. I guess that wasn't. I'm looking at the Nasdaq. I guess the Nasdaq was not. This looked like it was a MT5 did not trigger a buy in Nasdaq, but it did trigger a buy in the Dow. So this is our second attempt at trying to trade the bounce. And you will see that sometimes it takes 3, 4. One of the things that differentiates us from everybody else is that we don't quit on trades. As long as they follow our setup structure, we execute them. That's why at the end of the day, we're able to come out victorious almost every single day, because we're able to stay with our setup through discipline, structure, and automation. Okay, Nasdaq now finally triggered a buy. The target here is 12,714. It's a $15 target, $15 stop on Nasdaq. It's always an even risk-reward ratio. And for those of you who are asking me, could you trade with a better than 1-to-1 risk-reward ratio? The answer is actually yes. There are people in my room who trade that way. It's just the way I've designed the strategy to be incredibly high probability. I'm trying to resolve literally every single one of my setups. So can you see how close it is? Where it came to 13, 14, not quite there. Doesn't matter. We're not going to take it. Now we finally got it done. You see now that the Nasdaq trade resolved itself, and I'm waiting to hit 42.67 on the Dow. We'll see if that allows us to resolve. One of the most important aspects about this trade, let's see, it's going to tease me a little bit, but let's see. I think it should hopefully resolve. We'll see. Is it's very important to stay disciplined to stops and targets, because it's those stops and targets that absolutely ensure that the overall strategy is net positive and grows our account. By the way, as you're seeing this visually on TradingView, I'm also contemporaneously trading this in my real account on Surge, and you guys could see that we took the cycle 1 entries on the Dow and the Nasdaq, and actually they got resolved. Why isn't I wonder why it didn't. I guess it just didn't refresh. I guess it just didn't refresh. But anyways, we'll leave that as is, and that will refresh once it's ready. So yeah, I mean it's very interesting, and very. I think maybe it entered actually on MT4. It entered very late on MT4. Okay, so I'm actually on MT4. I'm targeting 36, so it's fine. Still waiting to see if we can resolve this Dow. We've already made 30 points in Nasdaq since you and I have traded, and we're just waiting to see if we can make 30 points in the Dow. We need 42.67. We're very close, and as tempting as it is to within take that profit within 1 point, we don't do it because it's just bad protocol. If we get stopped out, so be it. We'll go back in for the next setup. The whole idea is to have a system and strategy in place that's as repeatable as possible, so that you don't interfere with it, and you let the process over the long run really work in your favor. As I said, the goal here is to make 10 basis points a day, which you think is not a lot, but is actually 200% a year. It's to double our account in a very efficient, low risk manner, with very minimal drawdowns, all day long. So that is what we try and do all the time. And yeah, I mean, it was, this is, for those of you who are new, it might be very painful to watch this, but we're kind of used to it. So a high was 40.73 and our target was 42. So we missed this particular target by a measly 1 point of spread. And we may very well get stopped out. There's a stop here, sitting here at the, what's the stop loss? I can't even see it. I have to adjust my, what's the stop loss? It's 82. 82. The stop loss is at 82. So we'll see if we can survive the stop loss in the Dow. and maybe it'll recover the bounce. And if it doesn't, then we regroup and try again in the right conditions.
Okay. So in the meantime, while we wait for these trades, we want to talk a little bit about, how we help you, achieve consistent profits. And we basically do that in 3 steps, a large part of which we kind of showed you today. But, just to refine it, step 1 is you get to learn our trading strategies. I trade zip, Boris trades bounce. You got a sneak peek on both, what zip looks like, what bounce looks like, and how powerful they can be. So, in the step 1 is you learn our trading strategies, and then you actually get our trade ideas. So not only are we not only teaching you the strategy, but we're showing you how we use it, and we provide you with the trade ideas with precise stops and limits over Slack, Telegram, as well as Zoom for our live trading sessions. And then you can manage your trades with our members only indicators, where we provide you with trade management tools that will allow you to automatically or quickly get in and out of the positions, which, trading, being able to get in and out of positions is very, very important when it comes to day trading the markets. And this just shows you an illustration of, Boris's bounce setups and how he uses these every single day during live trading sessions like this with, our BKForex members. And in doing so, he has taken his prop account from 0 to over 20,000 in 2 months. And that's only trading 1 hour a day. If you trade with me, which you get as a part of the BKForex experience, you get to trade with Boris, you get my trades twice a day. You will get the zip indicator, and you will be able to trade zip. And in the past 6 months, I've made over 1,500 pips, and you got to see how powerful zip is with the zip indicators this morning. So how do you become a member of BKForex? You can register for an audition account with SurgeTrader. And when you register for an audition account with SurgeTrader, you get 1 month BKForex membership for free. That's $175 value. So you get to, experience everything what we would do, learn our trading techniques, and, use them in your audition account alongside, Boris. And see how far you can get with, passing the audition. The great thing about Surge is that you can get up to $1 million in funding with no time limits. And we've selected them as a partner because we think, they've got really strong, integrations as well as technology to help you achieve the results that you want. So if you want to get 1 month free of BKForex and also take the Surge edition, you can use our 10% off promo code, which is BKForex 10% off. And you can use it to trade, Forex, indices, stocks, metals, oil, and crypto. So we invite you to give all that a shot because it's a really great way to, try BKForex without, paying any additional cents, while also, pushing yourself in the direction of becoming a funded trader. So, Boris, do you have anything to add before we open up the floor to questions?
Sure. Can I just change my screen?
Yeah,
now?
absolutely.
Okay. So let's get an update on my trades here. So we just actually, by the way, sorry, I wanted to update you because we were long gold. We just made profit in gold, which you guys just missed. And now we're that entry 3 in the Dow, and now we're targeting 28. So one of the things you see about my strategy is that, remember, we were targeting 42 before to make all our money back. Now we're going to we just need to make 28, and that will make us completely whole on the Dow trade and put us into profit. So just waiting to see if we can resolve this. This is really the only last struggle. And then gold is oil is going to be oil tends to be a very, very long trade. It may take a couple of hours for us to resolve this particular trade here. But we've already resolved gold. We've actually made $35 and then another $50, so $85 in gold. We made $30 in NASDAQ, and we are waiting to see if we can resolve the Dow trade, which is the really critical trade, and that would put us another $30. So that would be 60, 85, whatever that is, about $150 of just last couple, just quick NFP trading. And of course, there's a lot more to go with that. This is, I'm sorry, it's not dollars, it's points, because obviously the size of this is much more than $1 per point, depending on what size that you're trading. But this is points, so we made about 150 points of profit. And of course, for some of you, that could be $1,500 worth of dollars, depending on what size per point you're trading. Okay, so that's pretty much it on what's going on over here. We're just watching the Dow trade, and we'll see if that can pop ahead of the New York Open, which is quite still about a 35 minute away from us. So it's still a long way away. But hopefully we get a little bit of a bounce here on that. And let's see if we got any questions here. Where are the questions? Okay. All right. So Mika says he'll see us in the room, which is what we love to see. We want to see everybody who's listening here to join us in the room. If you're a Surge member,
I'll put back up the info on the screen.
Okay, please do. And if you're thinking of joining Surge, I mean, I can't think of a better reason to come join us, because literally you're getting all of our trading expertise for free to try out for a month. And then, if you like it, we hope that you'll trade for us for the rest of your life, because that's really what that's our goal, is to trade for a living. We do this all day long, every day. We've been doing it for decades. And as you can see, we really trade. We don't fool around. We don't say, oh, it looks like a engulfing candle. Perhaps it could go here with it here. We give you hard targets, hard stops, hard entries, hard wins, hard losses on every single trade there is. There's no fooling around here. And we count every trade and fully have them was authenticated, right? So experience with us is a real experience, and that's really real trading experience. That's what we hopefully feel you guys get out of this webinar. Anyways, let's Canadians. Oh, something about Canadians are allowed to trade on this platform. I believe so, depending where you are in Canada, but I believe so. Yes, I believe Canadians are allowed to trade on this. Let me see if there's something else. So there's like quite a lot of questions. Do you see the questions, Kay, or no? Do you want me to read them all to you?
I can see the questions. Let's take a look.
Okay. So team, thanks for the amazing thing. SurgeTrader has a risk management rule that does not allow traders to hold trades over the weekend. Yeah, it doesn't allow trades over. We don't really hold trades over the weekend. May I know how can strategies be impacted by this rule? This is a question to you about not holding trades over the weekend.
I don't hold trades over the weekend.
Right, exactly. Neither do I.
No, we don't have to worry about that. We always square up at the end of the week. After the webinar, how much is the cost? It's $175 a month. You're getting 1 month free. Although if you become an annual member, there's definitely a discounted price.
Yeah, absolutely.
Let's see what else. If I join your room, and YouTube channel is simply YouTube/BKForex. And some of the people who asked questions had left already, but that's pretty much it.
That's it. So is there a Discord group? No, there's better. There's a Slack group, which we've just showed you. In the Slack group, you get, so let me just show this, or maybe, Kay, you have the screen, maybe if you want to show it to them. Maybe you can just run through your trade signal channel, smooth channel, and just show them exactly what they get when they are.
I mean, for me, I put out my trade ideas. You can see we had profit targets hit. Put out trade ideas. You get the charts. This one we sold with the double zip sell signal yesterday. We also had some other trades, and I always provide a explanation on why we're taking the trades as well. And then with Boris, he live trades, but he posts his trading replays on here for anyone. Obviously we prefer you to join the live trading session, you really should be there. But he also posts the replays, and then on his bounce channel, he posts the trades with, you know, which levels you should be in.
All levels, and those trades are ongoing, literally, like, you know, they basically, there's a pause between 10 o'clock, 10 p.m. New York till about 4 a.m. London, and from there,
Yeah.
you
The
know,
community is great within BKForex, so, you know, people also share their own charts, their own ideas, and, you know, you just learn a great strategy, and also, you know, how to use it effectively. And we show you how we use it every single day. So, you know, that's something that's, you know, really unique as well.
Yes, and then, you know, because that's the reason why that's obviously so valuable, is because once you sort of learn the strategy, you can then make it your own. We're great believers that you can only become successful in trading if you personalize the strategy to yourself, depending on your personality, your point of view, your time availability, everything else. And almost everybody who's successful in our room customizes our strategies to some extent, and that's the beauty of our strategies, is they're very customizable to your taste and structure, as long as you sort of understand the underlying guidelines of what drives our trading philosophy. I think that's a really powerful reason for why you want to come join us. Is it's not just about banging pips every day. It's about understanding the underlying philosophy and then using that for the rest of your life to hopefully be profitable for the rest of your life. Yeah. So it's good. We've had good attendees in the webinar today. I'm glad that, you know, a lot of people showed up. I'm glad they got a chance to see us trade in action. I'm still floating that Dow trade. It came to like 20, 28 was the target. Still in trade. You know, you want to find out how that trade resolved? Come join us in BK, and I will update you. That'll be my you know, my incentive for you guys to come join us. So, and come for you to come join Surge. But other than that, yeah, we're good. This webinar is recorded, and I believe Surge is going to, and I think we're going to give this, and, you know, everybody who's on the list is going to be able to get the webinar on demand. And that's it. Is there any final words from you, Kay?
There's some final questions. Is it fine if we trade only Forex? You know, yes, it is. I only trade Forex, so you can certainly just trade Forex with me. And then, you know, there are questions about, you know, what's the outlook for dollar CAD today. You know, pretty much we've seen, you know, the NFP movement lead to a very nice dollar rally. So while dollar CAD is kind of flatlining, I think for the most part, you may start to see it drift higher. But we don't have, in my opinion, we don't have any zip, you know, buy or sell signals. So we'll have to wait for that to really trade.
Yes, I mean, you know, one of the things that you'll see, or hopefully you guys get just a, you know, sense of this, is that we're successful when we stick to our rules, and we try to, you know, one of the most important things about trading with us at BK is just good set of behaviors, you know, like sort of best practices. We try ourselves to practice best practices as much as possible, because it's really, I hate this word because everybody uses this word, but we really live this word, which is process. And I think the right way of, I think the proper word is just way of life, you know, your value, your trading values, because I think that's really the much truer thing. And we try to practice those, which is very, very controlled risk management, high probability trading, and slow and steady. You know, sorry?
It's really about consistency. It's not about hitting, you know, one big winner once a week. It's about consistency and doing it every single day, every single week.
Correct. We don't practice the lottery method of trading, which is, you know, have a hunch, bet a bunch. We do the exact opposite. We sort of trade, at least bounce. I always use the analogy that we trade like an insurance company or like a casino. We keep our edges always. And, you know, if you look at the history of most profitable companies for the last 100 years, 200 years, those are the insurance companies. It doesn't matter what technology goes on in the world. Prudential has been around since 1800s. AXA has been around since 1700s. Equitable has been around since 1800s. There are very few companies that have been around for that long. What that tells you is that that business model is really, really robust. And that's what I try and emulate. We try to emulate the businesses that have been in business for life and make money every single year in our trading. So that's sort of what we do. And we hope that you guys who are thinking of Surge or already part of Surge come join us, because that's the experience we try to live every single day. So I think we're good, right? Okay, I'll let you read us out. Wait! I got hit on my Dow. The Dow got done at 28, so that trade got done. So now we can officially say that we have made 150 points in live trading, because that trade got done. So there you go. Hope you guys enjoyed that. That was a lot of fun.
Wonderful. So, with that, if you have any further questions, you can always feel free to email us at contact@bkforex.com, and we'll be more than happy to answer them. And as we said, with Surge, you get 1 month BKForex membership free with any addition account, and you can get 10% off for joining us today using this promo code BKForex, 10% off. All right, have a great weekend, everyone.
Thanks, guys. We'll see you in our Slack room.